What's going on, everybody? I hope everybody's having a great day today. We're going to be talking about how to trade the trend because the trend is your friend, guys. So, we're on the Thinkorswim trading platform, and I'm just going to be showing you pretty much how to make trades just by judging the trend of a stock and just by judging a couple of factors here, because as traders we're trend traders. The trend is your friend, so trends often has volume, and volume is what we look for. So we have ticker symbol solo up here, SOL or SOLO, and so on the Thinkorswim platform, you go down to drawings and go to trend line right here, and now you can draw trends. So looking at this stock, we could draw a variety of trends just by looking at it. And on the daily chart, it's often a lot harder to draw trends. Like we see this one here, and often what I like to do is I like to draw them on the top, just because you can have a solid trend break, and that's where it's the best to go the opposite position. Meaning, so if the stock's going down and it breaks the trend, then a good spot would be to go long and up, so you could get in for the break of the trend and then push back up. So that's changed the stock. That's changed the day here. Let's go to 5 day, 5 minute, and look at this stock a lot easier. So we had this huge rush from roughly 160 all the way up. Whoops, let's delete this. So all the way up here. So pretty much we just had this explosive rush here, guys, and then it hit a high of $6.68 before selling off. So right there. So pretty much this looks very similar to a pendant pattern. That is when the stock is gapping up, and then it pretty much just consolidates down, and then it breaks through. So pretty much the best spot to go long on the stock would be the break of the trend at 574 and taking profits all the way up to $6.74. So trends are super important. Let's find a different stock so we can draw some more here. So let's just go the top percentage gainers here. That's, I believe we got to right here, red. So IVC, perfect example, guys. So this stock was gapping up roughly 36% and was explosive. So if we would have drawn our trends, we know that the trend is your friend, so we have an upward trend. So for the break of the trend would be at 774 to push up, but this one would have been a good candidate for our gap and go. So we wouldn't have really traded this one for the trend setup here. It would have been a gap and go. But so this one's a little different, because the gap and go is pretty much when you get in for the break of pre-market highs and then take profit all the way up roughly anywhere from 25 cents to a full dollar per share. So that's probably the best strategy on pre-market gappers. But drawing the trend, it helps you get a good general direction where the stock is going. So you see how it is on an upward trend. So now we know when the market opens, it has the favor of the bullish traders, meaning that we want it to go up. So let's pull up another one here. Let's go to CYBR. Let's see this one. Very similar scenario. Gapping up. The one thing that was a little concerning here is we had this huge sell-off from the market, but then it got bought back up and maintained its highs. This one was a little more expensive than I would have really played with, but you can still definitely make some money. So if we were to drawn out, let's say we drew them out at the highs of each candle here. So we would have been very similar to this, guys. So you can pretty much just make textbook trades just by judging this trend. It hits it, possibly go short, and take profits for upwards. This would have been a $2 profit. Yes, the stock's more expensive, but if you can afford it, then it's all good. But so this is just a common trend trade, and what often likes to happen is if you draw out the bottom ones like this, then we get this squeeze. So this right in here will help the stock decide which way it's going to go. If it continues to rally up, then we know roughly at the high of 105, we'll get a squeeze, and that squeeze is where we'll push out the short sellers because they'll start covering, and when they short sell, they're actually borrowing the shares, and then the broker will buy them back, so that will have a price surge and will shoot the stock up. But since this one broke below it, this would have been a good short candidate at 104, 104.81. So that would have been an 81-cent profit on that one. Let's go to Yeti. So I believe Yeti is a recent, pretty recent IPO. I thought. Let me see. Let's go to 3-year. Yeah, this is a pretty recent IPO. That's what I was thinking. So IPOs are a little different because they often do have more shares, or not more shares, but more active volume. So looking at this, the trend is upwards slightly. It's not too big. If you guys can see it, you guys can slightly see it. It has that upward trend. And then here we had this huge buying pressure. It went from 1856 and hit a high of 21.19 pre-market. So looking at this, all right, if we drew our trend lines right, boom, we would know this stock has the favor of the bulls or the buyers. So let's find one where let's do percent losers. So INO here, gapping down. Gapping down is an often very, very common way short sellers will find stocks. So judging the trend, we know it's gonna possibly have favor in the bears. And as you guys can see, throughout the day it opened at what did it open at? Opened at 377 and hit a low of 367. So that there's a 10-cent in there, but this one most likely had either a higher float. Yeah, I believe this one had a higher float. So let's do one more here. Let's go. Let's do this. Let's go to customize, percent change, and now let's do this. All right. So looking at this one here, now this one is a little different, but still, you could have made money on it. So what I look for if I'm going to ever short a stock is it's below the moving averages, and that's what it did. So this one, if we're drawing trends, see that it is only like this. That's the trend is down, that we know can possibly push back up to the trend line of 1358 before we get that push down. And that's pretty much all this was, is the bears and the bulls pretty much just fighting to see what direction the stock's going to go. As you guys can see, it opened at 1220 and hit a low of 1129 before it slowly came back up. So trend lines, very important tool, and I hope this video explained it a little easier. And if it did, please drop a huge subscribe and like the video, guys. So that is it. Remember to always stay happy, stay positive, take care.